Hey, how's everybody doing out there? All right, I didn't have a chance to do a video earlier because I was busy, but I have time now, so let's get into it. So, where do I want to start off? All right, let's start off with the employment report, which came in slightly below the consensus. However, those of you on the MMT trader list, you know I sent out an email last night saying it would come in below the consensus. I was right on that, and that forecast was based on my analysis of the employment and withholding tax data. The unemployment rate fell. However, the labor participation rate fell, and that's the second month in a row that it was down. And when that thing goes down, it tends to bring the unemployment rate down because that's the numerator in that fraction. So if the numerator goes down, if less people are looking for work, if they get discouraged and they decide to just drop out of the labor force, it shrinks that ratio, that fraction, and it makes it look like the unemployment rate is going down. But basically what has happened is that people just gave up. What surprised me in this report was that the October figure, which originally came in a little disappointing at 161K, and I thought it would be revised higher based on my analysis last month of the employment and withholding tax data, that was revised lower to 142K. So, all in all, I would say it's a kind of a weak report. I mean, we didn't hit consensus on the number. It certainly wasn't an outsized print like we saw in the ADP report on Thursday. The unemployment rate came down, but for the wrong reasons, as I just mentioned. And October was revised lower. September was revised up a little bit, but the 2 months together actually lost 2,000 payroll jobs. So, weak report. I call it a weak report. So the stock market's still a little sluggish in here. We had that sell-off yesterday, which, as you know, I'm short on the S&P. I've been short on the S&P based on the flows. Speaking of the flows, there has been no change in that trend, which now, as I mentioned, there is no year-over-year growth in federal spending. In fact, it's slightly down by about $7 billion. We have that NDAA funding bill that will be voted on today in the House, I believe. That's $9 billion. So that, once that's done, it could bring us back up to a year-over-year flat growth rate, which is, it's not fantastic, but at least it's not negative year-over-year. What else? We still have the rate hike coming. I mean, the number today, I don't think did anything to change the likelihood of a rate hike, which right now, if you look at the CME Group's FedWatch tool, that's about a 96% of a rate chance of a rate hike. So I really believe that's happening. The dollar is falling today. And as you know, I have been saying this now, the dollar is putting in a major top here. Let me repeat, the dollar is putting in a major top here. I've been saying this for a number of weeks now. Everybody who was selling the dollar back in 2009 and 2010 and 2008, all the fools and all the zombies and all the Schiff followers and all those people who said money printing and hyperinflation and all that crap, they're debasing the dollar. They're debasing the currency. All those people, they're now buying the dollar. Okay, so they were fools back then. They're fools now. They're printing money. They're printing money. Remember that? Back in 2008, 2009? Jim+Rogers doesn't understand that quantitative easing is nothing more than an asset swap. It's the Fed exchanging reserve balances in the banking system for treasuries. There's no net change in the financial position of the non-government. You're taking away $1 denominated asset and you're replacing it with another dollar denominated asset of the same amount. The only thing is you lose the interest payment. So you're really taking away money. It's money on printing. That's money on printing. That's how come with all the trillions they did in quantitative easing, the economy never really grew faster than 3%. You'd think they'd scratch their heads at this point to understand that. But no, because for them it's religion. They don't care about the truth, right? The truth does not require belief. The truth doesn't care whether you believe it or not. I care about it for me because I make money from the fools. I take their money Every single time I have zero losses. Zero. It's totally doable. And I have people, subscribers and people who I've trained and who followed me. Zero losses. And they're novices. They come in. Some of them come in from a long history of losing, and I turn them around immediately. Now, on the referendum, on the by the way, I just want to mention too, got out of my crude oil yesterday at 51.65. I was originally in on that at 49 bucks. We held it all along. That's another thing. I have to tell you that all this year, when all the zombies and all the idiots who kept looking at the inventory numbers every week, I kept saying, supplies are one thing, but so's demand. Supply. I said 52. We're going above 52. I held it. I made a profit on that. Made a profit on every single thing. Made a profit on every single thing. You're unprinting money. What else? Oh, the referendum. Okay, so the betting odds. Now here's the thing, all right? The betting odds right now, if you look at all these betting sites like Paddy Power and Betfair and Ladbrokes, it's all showing the nose in the lead. Now we know what happened with Brexit. We know what happened with the presidential vote here in the United States. The polls and the betting was all wrong. So definitely the surprise would be a yes vote. But I don't know if that's going to happen. I'm not doing anything in front of this number. I'd almost be, inclined to do, to make a play for a yes vote. But I don't think I'm going to do anything. I have positions on. Whatever I have on, I'm leaving it, and I'll deal with whatever happens after it happens. That's it. But this could either be the one time that the polls and the betting odds are correct, or we have another upset, and this time the upset is for the yes vote. Yes vote, of course, would be very bullish for the euro, where we still have a huge amount of speculative shorts. The net position of speculators is short, and they're short big time. And by the way, my British pound thing, almost back up to 127. The British pound is going to recover all of its post-Brexit losses. And by the way, if this thing goes no on Sunday night, if this Italian referendum goes no, you're going to be very close to seeing the British pound erase all of its losses against the euro, all of its post-Brexit losses against the euro, okay? And the euro will probably trade down close to parity. Now, I don't know if it's going to get there right away because there's a lot of shorts in the market right now, but, a no vote will not be good for the euro, even though it's expected. I'll say that. Anyway, folks, that's it for now. I'll probably see you again later. Bye-bye. They're unprinting money.